Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, March 18th, 2019. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. Right now, we have a very narrow trading range heading into the session here. Just 35% of average is trading 10.75 points. It's been averaging 30.75 on a 2-week basis. That's a very narrow range, and perhaps part of the reason is that this Wednesday we have the FOMC statement and the Fed interest rate decision. That's going to give us another FOMC key level, very similar to some of the key levels you see up here marked. And these have been very, very important to us here over the last many years. For example, here is the FOMC key level from December 19th. And what happened there is price went immediately offered after that announcement. Eventually, after rejection here, price came back to it as a target. We see the same type of thing happen back here. Say, off of that FOMC key level right here, that was November 8th. Price went immediately offered after it, and then once it had rejection, it came immediately back to it, and then offered again. Again, these levels can offer very, very precise key pivots here to trade off of and to use as targets. We're going to get another one this Wednesday at 1 o'clock p.m. Central, 2 p.m. Eastern. Right here, we have a narrow day. We could continue to see range-bound action here. Fade new highs, fade new lows with an upward bias. I would say on a swing basis right now, any pullback could still be a great buying opportunity for a continuation higher until proven otherwise. All right, let's take a look now at the NQ. You'll see here the NQ looks very similar to the ES, but actually has a bit more range on this move. A great rejection on that Friday. You had a major stop run day here and a continuation on Monday, and then follow through the rest of the week. Very, very solid. Today, though, another narrow day, even more narrow than the ES. This one is 30% of average. It's at 29.5 points, and it has been averaging 97.5 points on a 10-day basis. So that tells you right there again that this market is very, very compressed as we head into the new week of trading. Again, fade new highs, fade new lows on an intraday basis, but you have to have an upward bias. This midpoint here from Friday's session will be very, very important. That's around 73.15 or so, 73.16. Failure to hold that level could open up more weakness today, but expect bulls to attempt to keep that area bid today. Again, tomorrow there could be a failed low that leads to a high. Maybe it comes Wednesday, but either way, this thing is trending up right now. Any pullback remains a buying opportunity until proven otherwise. Here's a look at crude oil. You'll see here crude oil has been very strong. We talked about the 10-day range here and how narrow it was. Right now it's showing a 5-day range, so let me make that 10 here. There is the 10-day average right there. Again, 130% now, but before it was very compressed here, and that's when we knew that we could be looking at expansion. Given the upward trending trajectory of this market, I mentioned any failed new low like this could catapult this thing much higher towards 60 to 62, and that's exactly what we have here. You see a nice bounce off the 54, 55 level into the 55 zone. Nice rejection, a nice follow through, and again our targets were 60, basically 60 even, but really we have two key range targets, and one of them is 60.65 and the next one is 62.70. So those two are big time targets here to reach on a key range basis. Overall, I'm expecting this thing to go somewhere between 61 and 62 based off of the primary target for the month, which is about 61.80. All right, that is it for crude. Let's take a look here at gold now. Gold, again, every single one of these markets has been bullish, even gold. For the most part, we've had a pretty strong sell-off recently, and that's given us a nice key range here to work off of. However, we have not reached the midpoint of that key range to solidify that, and that's right there at 13.15.30, 13.15.20. And since this low here, we've pushed higher toward that level, but we've had to come back and test the 12.93 zone a couple of times. It's held every single time, so 12.93 is very, very important on the downside. You want to see bulls continue to hold that zone, and right now we have a fairly narrow range, but not super narrow. It's 70% of average. Just 8 handles though, and it's kind of inside day to the last few days. Double inside day, wide-ranging double inside day. It appears that there could be a stop run that could come up. All I'm looking for is for this thing to hit the 1315s here so that we can lock in this key range, and now it becomes part of the next round of either trades or targets that we use. For example, if this thing were to come up above the key range into 1360, it could be a great trap to bring it back down and perhaps back down to the 100% target on the downside. So we'll have a game plan to use from that perspective. All right, that is it for now. We'll see how the market plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room.